webinar. Hello, this is Bruno from Spainguru. This is the free Spainguru Spanish Taxes Overview 2025 webinar. About Spainguru, our objective is facilitating the relocation process for English-speaking foreigners to Spain since 2014, so a little more than a decade in the industry. We have some pretty good reviews on Trustpilot and Google. You can find them online. Just search Spainguru reviews, and you will see that you are in very good hands. You can trust us. And just a very little intro about Spainguru. So you can use Spainguru as a tool for your moving to Spain project, or if you are already in Spain, also it is pretty useful. You can use Spainguru absolutely free. Of course, I have vetted partners that I have personally vetted myself, and I have been most of the time recommending for several years. And I used most of them, specifically immigration lawyers, tax advisors. I have used them personally. So you can use Spainguru for professional help, immigration experts, tax advisors, financial planning, visa compliance, for health insurances, visa compliance, and medical certificates, anything you need for visas, for residency applications, apostille services, all those private services vetted by me. You can find them on Spainguru and more than 100 services out there. But as I said, you can use Spainguru for absolutely free. So if you take a few minutes just to go on Spainguru.es, you will see you can sign up for a weekly newsletter. You can opt out anytime. It's every single Monday where I list the most read discussions on social media, the most watched video that week, and much more. A YouTube channel with a video published every single day. So almost 900 videos already. Blog posts, almost 1,700 blog posts or articles out there. And as I said, a very big community with an aggregated total of 140,000 members, with immigration group, dedicated non-lucrative visa group, digital nomad visa group, and so much more. A disclaimer about this webinar is this presentation is for general information purposes only and does not constitute legal, financial, or tax advice. Consult, please, with a qualified tax advisor or legal professional for personalized guidance. You can find them on Spainguru.es. Spainguru is not responsible for any errors or outcomes from using this information. It's such a big disclaimer, you will ask yourself, so what will I gain today here? All right, let me clear up and set the right expectations for the information you will receive today. I hope that at least you check these 4 boxes. The first one, gain an overview of Spanish taxes, understanding the key tax categories in Spain or the Spanish tax system, learn the basic principles of taxation in Spain. Second, preparing for informed conversations with tax advisors. So I will not talk here with tax jargon. I will talk to you in your own language, hopefully, but so you can engage more effectively with tax professionals who are not that used to speaking the everyday language, unfortunately, and ask more precise and informed questions to them. Third, clarify the role of professional tax advice and understand that this webinar will provide you a general information and that will never replace personalized tax advice because individual circumstances can significantly impact your tax liabilities. So it's very important to understand that. And identify key considerations for expats. You will learn about potential tax implications, especially with the focus on US and UK nationals, but not only them, and be aware of compliance requirements and deadlines in the calendar to avoid potential penalties. Okay, now let's go with probably the most important tax concept, Spanish tax residency. When do you establish tax residency in Spain? And 99% of people fall into the first condition, which is if you spend more than 183 days physically in the country within a calendar year, that is from January 1st to December 31st. And if you spend literally 1 minute inside Spanish territory, that counts as a day, okay? And it doesn't matter your immigration status. For example, if you enter Spain at the beginning of the year as a tourist, those days will also count and will add up. If you come back later in the year, for example, under a Spanish non-lucrative visa, and you stay less than 183 days. But if you add the days that you were here before until January 1st, that same year, and you are more than 183 days physically in Spain, you will be considered tax resident in Spain. And that will make you liable to pay taxes on your worldwide income and potentially on the net value of your assets until December 31st. Then there are also a couple of other conditions to become Spanish tax resident with the same implications. The first one is if your main source of income comes from Spain, for example, you own property here and your main source of income is here in Spain, Or if your center of interest also is in Spain, for example, your family lives here permanently, your children, your wife, you don't spend 183 days plus in Spain, but tax authorities could still consider you in such situation a tax resident in Spain. After July 2nd in a given year, there's only 182 days left until December 31st. So if you haven't been in Spain that year and you arrive after July 2nd, you will avoid making yourself a tax resident during that calendar year, right? So as I said, make sure to verify your travel records if you've been here before during the year as a tourist, and then under a different, let's say, immigration status, all those days count. Now, the consequences, as we said, being a tax resident in Spain, you will be subject to taxation worldwide income and assets. And as a non-tax resident, you are also liable to pay tax, but only on income and assets sourced from or located within Spain. Talking about non-residents, there are two groups. If you're holder of a EU or associated countries passport, then you will pay a flat rate of 19%. There are different types of income. And if you are a passport holder of other countries, for example, USA, UK, and you're a non-resident, the flat rate for non-residents goes up to 24% for the most common types of income. And you can see there the table, there's 19 as well for other types of income. Okay, this is for non-residents. Now, let's talk about the different tax systems and obligations in Spain, or regimes, tax regimes. There are two tax regimes. The first one is the general tax regime, and the second one is the special tax regime, or Beckham law. The first one, the most common general tax regime, it includes personal income tax. In Spanish is IRPF, Impuesto sobre la Renta de las Personas Físicas. Okay. Then there is also the wealth tax, which is a regional tax that applies to the net value of your assets, of your wealth. And then there is the solidarity tax, which is a national wealth tax that applies for all the territory in Spain, but kicks in at higher threshold. We're going to talk about them in detail later on. Then there is the 720 form, which is an informative form that you present at the beginning of the year, where you inform the tax authorities. You don't have to pay anything. You just inform your assets by different categories, for example, bank accounts, etc. Okay. Also, again, after a certain threshold. Now, there is the special tax regime, as we said, that not everyone is eligible for it, mostly for employees of foreign companies who send the employee to work in Spain. Only those people, I would say only, because it is very rare that other people in other situations are eligible for this tax regime. So only these people would be eligible for the Beckham law, okay? And a common misconception is that self-employed or contractors moving to Spain and work for other companies outside Spain are eligible for this special tax regime. It is extremely uncommon that they are, so don't count on it if you were counting on it. The advantages of this special tax regime or Beckham law, the most famous one is a flat 24% tax rate for your income, okay? But in fact, I think there is an error there, because the income is the income that you make in Spain. It's not the worldwide income. Okay, so non-Spanish tax income is exempt for taxation. I will make sure to fix this mistake in this slide for the next webinar that I hope you join again. There is no requirement to submit the 720 form at the beginning of the year, where you inform the net value of your assets or pay the wealth tax. Okay, but there are some cons or disadvantages. Usually what tax advisors will tell you, if you make less than 55,000 euros of income, there is additional administrative burden that may outweigh the benefits of this special tax regime. There are no family deductions and allowances, so it doesn't make too much sense to apply for this special tax regime if you make less than that threshold, round numbers. Now, let's talk about the first tax obligation, the Overseas Assets Reporting, or 720 form. As we said, this is a declaration of assets and rights held abroad, and you will list those assets, value, and rights held abroad by different categories. For example, bank accounts, investments, real estate, like properties, cryptocurrencies. This is the Form 721, which is a pretty new one. And you will declare the existence of these assets or rights when the full category goes over 50,000 euros in value. For example, you have 10 bank accounts outside of Spain with 5,000 euros in each. The whole category of bank accounts, 10 times 5,000 is 50,000 euros. So you will have to declare all those 10 bank accounts. There is the first year requirement in which you make the full disclosure of overseas assets for the wealth tax. So when you become a resident in Spain, tax resident in Spain, the following year you will have to declare the 720 form for the year in which you became a tax resident in Spain. And we say, like, do you declare it for the wealth tax? Because really the tax authority want to know your net worth in order to understand if they can apply wealth tax to you or solidarity tax, okay? And potentially, depending on the type of declaration that you make, maybe they can infer or deduct that you're also obtaining income worldwide, right? And then all the subsequent years or years after, you only have to file it, this 720 form, if there are changes over 20,000 euros in any of those categories or asset closures. So you're not, let's say, it's not mandatory to file every year if there are no variations. The deadline for submitting this 720 form is March 31st. So, and usually if you work with a tax advisor or with a gestor or accountant, you start or begin to prepare this filing on January 1st, okay? And you will need to provide documentations together with this form, like bank statements, details of your overseas assets, like properties, etc. Now, there is the second tax obligation, income tax, okay? Probably the most important one, or also called IRPF in Spanish, okay? So you have different types of taxable income. First is the ordinary income, okay? And then the investment income, taxed at lower rates. So the ordinary income is subject to progressive tax rates that range from 19% to 47%. Inside this category of income, you have the salary, the rental income, and business earnings. And then inside investment income, you have dividends, interest, capital gains tax. As we said, the rates for the progressive brackets are lower. They recently increased the top bracket to 30%, in fact. And the deadline for submitting the income tax in Spain is June 30th. Okay, so in June 30th, 2026, we will submit our earnings of 2024 tax year, right? And you usually begin to prepare it on April 1st. Now, for US citizens, as you know, if you're a US passport holder, at least you have to file taxes in the States, at least inform the States of your tax situation. And usually the deadline is April 15th. But if you live overseas, you have an automatic extension of that deadline until June 15th. You will pay some interest because of delay filing, okay? But it absolutely makes sense because first of all, the tax treaties between the US and Spain establish that if you're a tax resident in one country, that's where you have to file first. Second of all, you will file your taxes in Spain and credit them towards your taxes that you own in the States. So basically, you will pay everything in Spain, and with that check, let's say, or that information, you will file in the States and you will not have to pay taxes in the States, usually, okay? And doing first in Spain and after in the US makes it much better and less, let's say, prone to errors. Okay, so that is what it is recommended. Now, let's talk a little bit more in detail about how the progressive tax brackets work, because a lot of people also have this misconception, and we're going to use round numbers or ballpark figures. Some people think, because if you look on the table on the right, the different brackets that go from 19% to 47%, you will see that on the bracket 5, for example, if I'm making a certain year, I make taxable income for 100K, some people think, oh, I will pay 45% of effective tax rate on my income, but it doesn't work that way. The way it works, and you can see here on the left, is that the first tranche or the first bracket, the first 12,450 euros that you earn, you will pay 19% income tax on them. Then for the second tranche, 12,451 to 20,200 euros, you will pay 24%. That means that when you reach 100K of income, you will be paying a sort of an average or median. Okay, so the effective tax rate really for 100K will be around 36%. These are ballpark figures, summarize, let's say, illustrative examples so that you understand that you will not pay 45% income tax on those 100K. Thanks God, it's not so bad. Now, I have made also here a present calculation for the different levels of income, how much would be more or less without exemptions or allowances, how much effective income tax rate would be. For example, if you made on a certain tax year 30,000 euros of taxable income, you would pay 24% tax rate, going up 26, 29, 30, 32, 36, reaching 100K. Now, there is the third tax obligation. We're going to talk about the wealth tax and solidarity tax. First, the wealth tax, Impuesto sobre el Patrimonio. It is a regional tax. There are 17 regions in Spain, 17, and they apply differently this wealth tax. Okay, so depending where you move, you're going to be liable for wealth tax from certain thresholds, okay, and you will pay certain amounts for different taxable incomes, okay, or you will not pay anything at all, okay, because the case of Madrid and Andalusia, Madrid has raised the threshold of the regional wealth tax to 3 million euros. So if your net worth is less than 3 million euros, you will not pay anything in Madrid. And in Andalusia, the threshold is lower, but there is 100% rebate. Okay, so you will file if you're over that threshold, which I think is 700,000 euros in Andalusia, but you will not pay anything because you will have 100% rebate. Okay, now there are regions like Catalonia where the threshold starts at only 500,000 euros. Okay, so you have to, if you are over these amounts, make sure to know the implications of moving to certain places in Spain. So a lot of people are moving to Valencia, but Valencia is actually not a great place to go when it comes to wealth tax. Okay, and again, they will apply progressive rates for the taxable income. Okay, so you will also have certain allowances as well. For example, if you own property in Spain, you will be able to deduct up to 300,000 euros from your taxable income. And then there is something called the 60% rule that is especially useful for people who have very big wealth, okay, who are very wealthy, let's say, but they have very small income in comparison. Okay, so there is a way to establish, let's say, a way to reduce your wealth tax if to a certain limit, if that is the case in which you have a lot of wealth and your income is small, so you won't be paying as much wealth tax in that case. Now, the deadline to file the regional wealth tax is June 30th. And again, the preparation starts April 1st. So the same as income tax. And then there is the solidarity tax, which is a national wealth tax that recently the central government created in order to go for big fortunes or wealthy people who were based in friendly wealth tax regions, such as the case of Madrid or Andalusia, right? So basically, you can't escape the solidarity tax, but on the other hand, the threshold to apply this tax is much higher. It starts at 3 million plus the allowance, so 3.7 million, if I'm not wrong. So much higher than the thresholds of the wealth tax, okay? And the deadline is 1 month after than the regional wealth tax. Now, whatever you paid for wealth tax, I understand that you can deduct it from the solidarity tax, so you wouldn't be paying twice those types of wealth taxes. Now, let's go to a use case scenario. Someone living in Catalonia, for example, and this person has, let's say, different wealth calculations, asset value calculation. Okay, as we said, Catalonia is one of the, let's say, least friendly regions for the wealth tax, starting the threshold for allowed net value of assets of only 500,000 euros. That is, if you have 1 million euros, and let's go through the table. If you have 1 million euros value of assets, you start paying wealth tax from 500,000 euros. But let's say that if you go to the second column, you're owner of a property, yes, you can deduct, if the value of the property at least is 300,000, you can also deduct 300,000. So you can have 500,000 allowance plus 300,000 deduction, 800,000 euros. If you have a net value of assets on December 31st of 1 million, let's say that only 200,000 euros will be the taxable amount for the wealth tax in Catalonia. And if we apply the progressive tax rates for this amount, you will be paying less than 500 euros that specific year. Now, if you go to the calculation for 1.5 million euros in assets value, you will be paying 3,000 euros. For 2 million, 8,000 euros. For 2.5 millions, 13,700 euros approximately. So this is how it would work. I remind you that you can ask any questions at any given moment. Make sure to use the chat box on the bottom right corner of your screen and add always a question mark at the end of your question, so it's easy for me to then see that you asked something. And if you think that the information I provide today is useful, you can always leave a review on Trustpilot. There is a button up there on the green bar. There's a red button that you can push anytime before leaving. Just push it, and it takes only 5 seconds of your time to write your review, which would make me extremely happy. Thank you so much, and let's go back to the webinar. Now, let's talk about the tax considerations for digital nomads. I have here, I think it's 2 more slides. I'm going to go quickly, but it's, I think, important. A lot of digital nomads joining this webinar. So let's talk a little bit about the implications and the different, let's say, ways that things could happen, right? Now, the first situation is you move to Spain as a W-2 worker or employee, let's say, not as a contractor, but as a full employee of a foreign company. Now, about the social security contributions, okay, so the payments are made in Spain of the social security unless the employer lacks a local presence, in which case the employer must register for Spanish social security or instead provide a certificate of coverage, the A1. At the moment, really, only the United Kingdom A1 is accepted by Spanish authorities, and it lasts between 1 to 2 years, as far as I understand, but there are no further renewals. So you have to think of a strategy if you want to stay in Spain on how you're going to be dealing with that, okay, after it expires, right? And I am also hearing in the last couple of weeks that some W-2 American workers are being accepted under the digital nomad visa, but it seems to be quite rare and quite exceptional. And you know, the authorities can be a little bit erratic, but I have to mention it because if you're in that situation, maybe you want to take a chance. Now, Beckham law benefits are available only to employees, as we mentioned, except very extreme and rare cases, and not the self-employed or contractors. Okay, so if you want to apply, if you want to file, as we said, there is the June 30th deadline where you present your income tax and the Beckham law form 151. Okay, now if you move to Spain as an autónomo, okay, or self-employed or contractor, right? So you are required to contribute to the Spanish social security system, which will provide you access to healthcare, public healthcare, and pension benefits. So if you're applying for the digital nomad visa or teleworkers visa or residence, you will not have to submit a private health insurance because you will promise that you will enroll yourself into the Spanish healthcare system by paying social security. Now, contractors are not considered employees, and you will have to manage your own tax filings and social security payments, which can be quite complex. So please use experts for that. Now, as we said, Beckham law usually doesn't apply to contractors, and the deadlines that you had to file your taxes will be different depending on when you arrive to Spain, because if you arrive in the second half of the year, you have to pay taxes normally as a non-resident, and once you become a resident, during the first year that you become a resident, you will have to observe different deadlines. Let's talk about a specific use case, and this is the last slide about the digital nomads. This is a real person that mentioned that arrived in Spain in September 2024. As you probably know, you can also apply for the digital nomad visa from within Spain, and it is actually quite advantageous to do so compared to the non-lucrative visa that you can only apply from Spanish consulates from outside of Spain. So digital nomad visa, this person arrived in September 2024. 1 month after, applied for the DNV. November was approved for the digital nomad visa, and in December registered as autónomo or Spanish contractor. And this is an expert who basically answered the question because this person wanted to know what were the tax implications in her case, since this person didn't spend 183 days in 2024, therefore wasn't a Spanish tax resident. Now, this expert said for tax questions, if you ask 10 different people, you'll get 10 answers. And that applies also for tax advisors, unfortunately. This is a particularly gray area as you weren't resident until you got the TIE card, which is the Tarjeta de Identidad Extranjero or residency card. So you weren't even officially allowed to work. You're supposed to pay tax in the country where you are physically working, which is maybe what you mean by address. So strictly speaking, on any work performed since September. So if you're a digital nomad working from Spain, even if you're not yet a Spanish tax advisor, the fact that you are opening your laptop in Spanish territory and working and invoicing customers wherever they are will make you liable for paying tax in Spain. So what will happen, coming back, is that in 2024 you will pay tax as a non-resident, and then you will pay tax as a resident once you become one. Okay, so let's talk about additional taxes in Spain, right? And then this is in general for everyone. First tax that I want to mention is the inheritance tax and gift tax, impuesto sobre sucesiones y donaciones, that is paid by the heir or recipient. And there are tax reductions and exemptions that vary by region, by level of parenthood, or or how far away you are from the family member that you are inheriting from, if it's a family member. Then there is the transfer tax, or impuesto de transmisiones patrimoniales, or ITP. This is the tax that you have to pay when you purchase a property in Spain, and you have to pay within 60 days of the signature of the deeds. Okay, this is different than the USA. You normally in the USA you would pay this same tax when you sell your property, but in Spain they want it at the beginning. So you have to allow, you basically have to save some money to pay this tax in Spain, right? Now it is a regional tax, so different regions apply different tax rates. The best one for this is Madrid with only 6% ITP, and the highest regions apply about 11%, and I think one raised to 12%. But basically, Catalonia and Valencia tend to be the expensive ones. Andalusia is 7%. Okay, so if you're buying a property of 300,000 euros in Andalusia, you sign on the 1st of January, you have until the 1st of March to pay 7% of 300,000 euros, which is 21,000 euros, okay, that you need to pay to the Junta de Andalucía. Now, the question here, 100% transfer tax to non-residents? I mentioned this because the Spanish Prime Minister, Mr. Pedro Sanchez, announced a couple of months ago that he was planning to raise the transfer tax to 100% of the property value, okay, to non-EU passport holders, non-residents who were buying property in Spain. We're going to talk about that. Now, let's talk about and sorry, I didn't mention new build properties. New build properties pay VAT instead of transfer tax, and the VAT for properties for real estate is 10% all over Spain. Now, the property tax, the EV, once you own the property, you will pay property tax, which tends to be much more affordable than the property tax than Americans are used to pay. I hear people who are paying $1,200 per month on their properties, whereas here, for example, for a 100 square meter apartment in Malaga or in Valencia, you will be paying around 350 euros per year. So big difference there. And it will depend on how big your property is, in which city it is, if it has swimming pool, not swimming pool, big common areas, etc. Okay, and it's based on the cadastral value of that property. Now, there is also the municipal capital gains tax, or impuesto sobre el incremento de valor de los terrenos de naturaleza urbana, also called the plusvalía. This is the CGT. Okay, so when you buy a property for 100K and you sell it for 200K, they will want tax on the 100K difference that you made. Okay. Coming back to the announcement of Mr. Pedro Sanchez about increasing the tax to 100% of the property value for non-EU passport holders, non-residents who pretend to buy property in Spain, I have several videos about it that you are invited to watch on Spainguru's YouTube channel. A long story short, it is very difficult that this happens because it goes against the very foundations of European laws. Okay, so I wouldn't be worried about it. Of course, I don't want to say it's impossible, but if you want to hear experts, tax lawyers, and expert immigration talking about this, you can find the videos on Spainguru's YouTube channel, or you can send me an email to hello@Spainguru.es, and I will send you the links to those videos. Anyways, I will always keep you informed about any changes or how things evolve. Now, coming back to capital gains tax, if you pretend or plan to sell your property before moving to Spain, you have to be careful because usually capital gains tax in Spain tends to be higher than in your home country. Sometimes in some US states, there's no capital gains tax at all. So it would be quite sad or unfair that you have to pay capital gains tax on the sale of a property in a place where you don't have. So the best way to do it, and there are ways to mitigate it, or if you reinvest the total difference that you made or the taxable amount into purchasing a Spanish property, if you're older than 65, there are ways to reduce it, mitigate it, or even not pay it. But the best way to avoid it is to time the moment in which you sell your property and the time in which you become a Spanish tax resident. Basically, by selling your property in a different tax year in which you will become a tax resident. The first situation, easy to understand, you sell, for example, in 2024 and you move to Spain in 2025. Since tax years start on January 1st from zero, you are selling in a different tax year. Now, if you don't have that option, if you want to sell the same calendar year from your property, you want to sell it in March, for example, 2025, and you plan to move to Spain in 2025, you have to make sure not to spend those 183 days in Spain. Therefore, you should plan to move to Spain after July 2nd because there's only 182 days left in the year. Always, if you haven't been a single minute in Spain physically previously, that calendar year starting from January 1st. Because if you become a tax resident in Spain later in the year, the effect is retroactive. You will become a tax resident from January 1st. And if you sold in March your house, you are liable for capital gains tax in Spain. Now, what are the rates for the CGT in Spain? Again, progressive tax rates that go from 19% to 30%. As I said, they recently raised it to 30% if you made a taxable income of more than 300,000 euros on your sale. Now, $1,000,000 question for people who are receiving pensions. Is your pension taxable? Now, you will be taxed. Your pension will be taxed if you become a Spanish tax resident, okay? The threshold for declaring the pensions, if you only have a one income source, is 22,000 euros annual threshold. But if you have multiple income sources, then the threshold goes down to 12,000 aggregate income and only 1,500 for secondary sources. But something very important, especially for people coming from abroad, receiving pensions from abroad, is that pensions from abroad appear as a second payer. So if they're greater than 1,500 euros per year, you still must declare it. Now, again, this is ordinary income from, let's say, salary or pension, and ordinary income tax rates will apply from 19% to 47%. We did the calculation before for a specific use case. Now, specific rules for US and UK nationals, and generally with any other country with whom Spain has a double taxation tax treaty. For the US, Social Security and private pensions are taxable, but government pensions are exempt in Spain, but you will have to pay whatever in the US, unless you are a dual citizen holding Spanish citizenship. So there are strong opinions about this, varied opinions by different experts, but people say that if you're American and you're not paying tax in Spain because you are receiving a government pension, if you become Spanish, the fact that Spain requires you to renounce your American citizenship, which no one does without any consequence, but now you will not be able to apply the double taxation agreement under the Spanish tax with the tax authorities. Therefore, you will lose, let's say, those benefits. Okay, so this is, let's say, controversial, or I couldn't find a proper answer. Some people say they will have consequences. So consult with experts if you plan to become Spanish. For the UK, more or less the same. State and private pensions are taxable, but public sector pensions may be exempt. Okay. The allowances for pensioners ages 65 to 74 is 6,700 euros annual allowance, and over 75 is 8,000 euros 8,100 euros annual allowance. Now, taxation of American 401ks and Roth IRAs in Spain, another $1,000,000 question. 401ks taxation in Spain, the distributions are taxed as general income at progressive rates from 19 to 47%, traditionally exempt from Modelo 720 reporting and wealth tax, but caution is advised due to evolving interpretations. We're going to talk about that later on. Roth IRA taxation, investment gains taxed as income at progressive rates, now up to 30, actually, up to 30%. I should update that. Must be reported on Modelo 720 annually based on the account surrender value of December 31st, subject to wealth tax with rates varying by region, and some key considerations. Coming back to evolving interpretations, there was a recent ruling. Really, the word is not really ruling, it's consulta vinculante, in which a person, an individual, asked the tax authorities to give the official interpretation of a rule. Okay, so if you want to search on internet consulta vinculante, that number suggests what the tax authorities answered was that they suggested that IRAs and possibly 401ks require reporting in Form 720. Okay, so ask a tax advisor if that is your situation, just to make sure that you're on the safe side, okay, in order to avoid any penalties, right? Taxation of American 401ks and Roth IRAs. I made different videos and blog posts. You can read them on Spainguru. Just search Spainguru, Roth IRA, 401ks, taxation, etc. on Google, and they will come up. And here I try to condense all the information into one cheat sheet that you can print if you want, or take a screenshot here, which is a summary basically of all that we said, with the most important concepts. First of all, tax residency in Spain. If you stay in Spain more than 193 days in a calendar year, you will be liable potentially for worldwide income and taxes on the net value of your assets, potentially. Key tax obligations, Modelo 720, overseas assets declaration, personal income tax on June 30th, wealth and solidarity taxes, the net value of your assets, and the special tax regime, Beckham law, for flat 24% tax rates, and other perks or advantages, but also disadvantages. Then taxation on pensions for US and UK nationals, but always thinking about the double taxation agreements. If you have government pensions or public pensions, maybe you are exempt in Spain. Then taxation on US investment accounts, 401k, tax as general income, Roth IRA, also taxed as different as investment income, and potentially having to declare them into Modelo 720. Then taxes for digital nomads, for employees and contractors, and Beckham law implications, and then additional taxes, inheritance and gift tax, property tax, capital gains tax, transfer tax, VAT, and so on and so on. Deadlines to remember: the 720 form, March 31st. And so this year is already, let's say, expired, already passed. Personal income tax coming soon, June 30th. Wealth tax, same date. Solidarity tax 1 month after. And then if you are an autónomo or contractor, you have to pay quarterly payments for income tax and VAT declaration as well. Now, as we said, how Spainguru can help: you can find immigration services, tax advisory, and many, many more services, and so many resources that are absolutely free. And here you can see also a tax calendar with the dates that we already mentioned several times. This is how you can use Spainguru. And don't forget that there are other webinars, like the non-lucrative visa webinar, moving to Spain, and a general Q&A session about the Spanish non-lucrative visa. If you want to stay in touch, nothing will make me happier than receiving an email from you at hello@spainguru.es. Join the Facebook groups, join the community, ask others, okay, and combine that knowledge with professional knowledge that you can find on Spainguru.es as well. Watch the YouTube videos. Everything is absolutely free to do, and you can maybe not watch the video if you don't want one certain day. There are playlists so that you watch only videos that are interesting to you. So yeah, definitely worth exploring that. Join the newsletter that I send every single Monday. And as I said, the content of this webinar is for information purposes only and it's not tax or related advice. Please consult with experienced tax advisors. And now we're going to go to the Q&A session. And if you haven't done so and you want to leave a review to Spainguru, in the top bar, top green bar, there's a red button up there that will redirect you to Trustpilot, where you can leave a review. Now let's go. Sorry, I'm changing now to the Q&A mode here. Fred, first of all, thank you so much for joining today and asking something. Let's see if I can answer your question. If you don't have any interactions with the Spanish state, e.g., no bank accounts, etc., and don't work at all, and you are here more than the 180 odd days, how can you be liable or caught for tax? This is the million-dollar question, okay? Different people will tell you different things. So this is basically staying under the radar. What I know generally is that immigration authorities are not connected to tax authorities, okay? So there's no communication between those two. So just to give you an example, there are a lot of people under a non-lucrative visa who work remotely in Spain and are tax residents in Spain, and they pay taxes to Spanish tax authorities, but you are generally not allowed to work under a non-lucrative visa, right? It's a gray area. So that's the opposite situation, okay? So first of all, it's 183 days that you would need to be physically in Spain to become a Spanish tax resident. So if you don't become a Spanish tax, if you do become a Spanish tax resident, you have to check if you have obligations with the tax authorities, or take the risk. I don't recommend it, okay? You saw the thresholds there in which you should start to at least file. So it's about taking a risk that, of course, I don't recommend taking. Andrew, again, thank you for joining today and asking a question. If I obtain Spanish residency as the spouse of a digital nomad, is there any way I can apply for the Beckham law regime? What I understand is that spouses of digital nomads actually have more rights than the main applicants, because the main applicants, they can have only maximum 20% of income sourced from Spanish companies, whereas their spouses, they have a work permit, like a full work permit in Spain, and can work for anyone, right? So I'm not an expert in Beckham law or anything about taxes, but if you are an employee, if you are eligible for the Beckham law, the fact that you are married to someone in a different regime doesn't matter, as far as I understand. If you comply with the eligibility conditions for the Beckham law, why not? Those are: you need to be an employee for a foreign company, you shouldn't have been resident in Spain for the previous 5 years, and a few more things. So definitely, you should at least consult with an expert to see the eligibility options, because definitely, I believe you could. And I know people in this situation who are under the Beckham law, personal friends. Now, Simon, thank you for joining today. Is a UK SIP taxed as income or investment? Tax as an income or investment? I have an article about it. Can you send me this question by email and I send you the link? And also have a video with a financial planner, Jack Barber, who is British, and talks about this. Okay, so please send me an email to hello@Spainguru.es, and I will try to answer you as fast as possible with the links to point you in the right direction to answer that question. Simon, are tax gains and dividends reset to zero on death? I don't know. That's a great question. Mary, if Spain taxes Social Security and US taxes and IRA withdrawal, can I use the tax treaty to have IRA withdrawal taxes eliminated in the US? What I understand is that you can credit whatever you pay in Spain towards your payments in the US. Chari, I just have a state retirement, pension, and Social Security. Where are my tax responsibilities? So if those count as public or state under the double taxation agreement with Spain, those are not taxed in Spain. Okay, so Social Security is taxed in Spain, but the state retirement pension under the double taxation agreement should not be. Okay, so that should be my answer. But of course, always talk to a tax advisor that can tell you. Okay, you need to send the papers and understand. So the tax advisor has to really confirm what I'm saying so that you know exactly your liabilities. But I would think that would be their answer. Jeffrey, I have an annuity that resulted from a pension, need to be included in Modelo 720, and if so, how is it valued? That's very, very technical for me, unfortunately. Sorry. And you have time. You have time to find out, because we already went through the deadline for the 720. So until next year, you have time to engage with a tax professional who can help you file the 720. My wife has a pension that is from the state of New Hampshire. Since it's from the state government, is that considered tax exempt? As I said, an expert has to confirm this, but according to the double taxation agreement, if it's a state government pension, it should be not taxed in Spain. Does this pension need to be included in Modelo 720? And if so, how is it valued? Those are very technical questions for me. Unfortunately, when I sell assets in dollars, how are the proceeds calculated for Spain? Taxes in euros. For example, is it based on the dollar gain or loss converted into euros on the day of the sale? Or is it the dollars received converted into euros on the day of the sale minus dollars spent converted? Wow, that's a very fair question. I don't know exactly. What I understand, what I know, I have clients abroad that pay me in dollars and pounds and Canadian dollars. What I understand is that Spanish tax authorities want everything in euros. So the Banco de España has a public tool, which is Conversor de Divisas. You search Conversor de Divisas, currency converter in Spanish, from the Banco de España, and they will give you the official exchange from the tax authorities on a certain date, which is a working day. So it has to be the closest working day to the event that you want to file, and you would do the transformation into euros. Okay. So, for example, not talking about this specific thing that you're asking me, but when I invoice customers abroad, I invoice them in their local currency, in dollars, for example, but what I file with the tax authorities in Spain, I need to do the conversion to the official exchange into euros because they don't want to be dealing with uh, other currencies, basically. How are the dividends, interest gains, losses for joint trust accounts split for tax reporting? Would it be based on the percentage of ownership? Again, you can see how, unfortunately, I'm ignorant about this. These are very specific questions that I highly recommend going with tax advisors, okay, who understand also how trusts work in your origin country. You mentioned before New Hampshire, so someone who works and understands the questions or understands the tax system in the US, okay, not doesn't have to be a proper, let's say, a registered CPA in the US, but someone who is used to deal with Americans taxed in Spain, and you can find them on Spainguru.es. How are the assets in joint trust accounts split for Model 720? I heard that you jointly own assets. Every owner has to declare the full value, even if their share is less than 50,000, and include the percentage they own. The form, is that correct? Again, I have my own opinion about the answer to this question, but I wouldn't really venture on answering that because it is too technical for me, and I could potentially be misleading to you. Marianne, I will be paying tax, of course, here in Spain on Social Security. I understand about the US-Spain tax agreement. However, US does not tax Social Security if only income. If I make a withdrawal from an IRA, I will be taxed in the US. Will I be taxed for such a withdrawal in Spain? Also, does the agreement extend to different tax incomes? What I mean is, if I pay tax on Social Security in Spain, does the agreement include tax I would pay in the US for another item, in this case, an IRA withdrawal? So what I understand is that you don't pay taxes twice, okay? You will be paying tax only once. The problem is that potentially you will be paying tax first in the jurisdiction in which the tax is higher, being therefore an extra tax that you wouldn't have paid if you haven't moved to Spain, right? Let's say an amount of money, right? Paying higher taxes, unfortunately. But what I understand is that you can deduct taxes that you pay in Spain to, let's say, credit them towards what you pay in the US. But again, those are very technical, and your personal situation will determine exactly how a tax advisor and expert will look at those details and how they will file your taxes, and prepare the final Spanish taxes filing so that you can use it to credit what you paid towards your US payment. Andre, if I obtain Spanish residency as the spouse of a digital nomad, is there any way? We already asked this question as far as I understand, or maybe I went all the way down to the question. So I think I made it till the end. This was by far the hardest Q&A session I had in a long time, including NLV webinars and any other webinar. So really, I really thank you for asking so sophisticated questions, so technical questions. But unfortunately, you can see that even if I do my best to answer you, I want to be sure not to mislead you. But definitely, you should engage. I don't know in which stage you are about moving to Spain, if you already decided it, if you are investigating, if it's just a dream, or if you're already, gathering documents to apply for visas. Definitely consulting with the tax advisors at least in the decision-making process stage of the process, it's advisable because tax implications can be huge depending on where you move and how you move and your types of income and your situation. So, and they have to be aligned with the immigration strategy that you want to pursue in the short, medium, and long term. Okay, and sometimes you can do things on the immigration side, but you cannot do that. Those will have strong implications in the tax side and vice versa. So taxes and immigration need to be aligned. Please consult with experts, okay, and decide whatever is best for you. Thank you so much for joining today. We made it till the end. Again, thanks for the people, especially who woke up extremely early just to be present and ask your questions, and maybe I couldn't answer, so sorry for that. And I hope that you will find the answer soon. Stay in touch. Any other questions that you may have, you can send me to hello@Spainguru.es, and soon you will receive a recording of this webinar so you can watch it again. Thank you so much, Fred. Thank you very much. And everyone else, stay in touch and leave a Trustpilot review if you have a few seconds, if you think the information that I shared today was useful. Goodbye and have a wonderful day. Bye-bye.